The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
All right, welcome to Multifamily Masterclass. I'm Jamison Manwaring, CEO of Neighborhood Ventures. Also have Bart Dill, Director of Investor Relations here.
Howdy.
And we're talking about some important things that are happening when it comes to multifamily, owning multifamily, investing in it. And the one that I want to start off with today is talking about baby boomers. So there are 70 million baby boomers who are in the process of retiring right now. They're going from full-time jobs and careers, owning homes, living in the suburbs, kind of the typical baby boomer thing. And now they are going to a different phase of their life, and many of them want to rent. And in this latest data, now 80% of boomers, baby boomers, think that renting is better than buying a home. This is up from 63%. So this is a dramatic shift in the mindset of baby boomers who now are happy with renting, wanting to move out of their house, wanting to move out of the suburbs and go rent a house. And one of the things that they pointed at, it's kind of like no surprise as to why baby boomers in particular would be happy with renting versus owning. But the things that they pointed at is 90% prefer to avoid any of the financial risk of owning a home. Maybe that home goes down in value. Maybe the mortgage payment is high, especially with current interest rates. And then 87% of them said they'd rather have the freedom to move versus being locked down because, you know, these baby boomers, they're on the move. They're out enjoying life. Yeah. And this is what we call the rise of the forever renter. And this trend around people who historically have wanted to own homes, and in their mindset, that's just part of the requirement of having a good life is owning a home. Now baby boomers are really going to start driving this trend that renting is more preferred to owning. And we have 70 million of them in the process of retiring. They're about halfway through their retirement cycle. So that's a lot of baby boomers going into that renter market.
And so many of them, you know, they've been married, they've had their kids, they've lived their life, and being in a 3,000, 4,000 square foot house with your significant other, it's time. You know, you want to go find somewhere else, you want to go travel, you want to go rent somewhere for a year in New York, Chicago, Nashville, Tennessee, and in a different market than what you're used to, and not have to deal with fixing the roof, you know, replacing the AC. All that is done by the property management at the apartment you're staying at.
Plus all the cost. If they were going to go buy a house, you're about 10% cost to purchase a home that you're going to sell a few years later. Maybe it goes down in value in that time. So especially to give them the freedom to make a move like that, have that experience. And so for people who are in the Phoenix area, you can see all these apartments that are going up. Phoenix was the number one market last year for new construction of apartment units that came on the market, 20,000 new units. We're probably going to be number one again this year. But the reason is because with all the people who are moving here, many of them are shifting their mindset from, do I need to move out an hour away to a house that I can afford, or can I live in town and rent? And these underlying trends around millennials, and now we're seeing it even more with baby boomers, are going to continue to drive the demand for renting.
And to be honest, I haven't even thought about baby boomers moving to Arizona to rent, because, you know, why wouldn't you want to live here? You have golf courses here, you have all the great amenities being in Metro Phoenix next to Old Town Scottsdale, all the different resorts. Why wouldn't you want to come right here?
Yeah, and there's a lot of senior living, 55 plus communities here. You can go rent there, but a lot of folks historically have bought properties there, and it's kind of not what it used to. A lot of retired folks wanted to get into those older 55 plus communities. Seems like now that's kind of past, and more of them would rather live in around where their kids are and where the young people are, and a little bit more mixed.
Yeah.
You know, that's not everybody. as we see these new apartments come up, and that's very enticing to go live in a brand new apartment or a newly renovated apartment versus a lot of these retirement communities. They might be manufactured homes. It might be older rundown homes, harder to have the same standard. And but Arizona has always been a magnet for people as they start to retire.
Yep.
And baby boomers are happy renting, and it makes a lot of sense. We also have that commercial real estate loan delinquencies are growing. And what this means is that more owners of commercial real estate, and commercial real estate includes several different types of properties. It includes office, includes retail strip centers, it includes multifamily buildings, it includes warehouses, it includes self-storage. Commercial real estate is kind of a big umbrella term that includes all of those things. And of all those different sectors, the one that's in the most trouble is the office sector. And I think everyone kind of knows about that by now. As more people since COVID are working from home, there isn't as much need for office, although those trends are starting to level themselves out. Nice offices, they tend to be full. It's more the older offices, the Class B, Class C offices that are not full, and they're having a reposition. But there are a lot of operators across these asset classes, including multifamily, who, because of what has happened with debt over the last 2.5 years, going from 3.5% to 7.5% or higher, they are now in a position where the property doesn't make sense anymore because that debt payment is so much higher. And in this article, it talks about how loan delinquencies increased up 1.25% in the first quarter, and that's the new high in this cycle. And so we're starting to see some of these kind of early signs, some of these are, fig leaves that you can see that are indicating something broader. And we also know many lenders are still working with their borrowers to rework the terms. And many of the borrowers are still working with the lenders to rework the terms of their projects. Lenders are being pretty flexible, either extending maturities or not requiring full interest payments in some cases. But we know $929 billion, that's almost $1 trillion in outstanding commercial mortgages across all commercial real estate mature sometime in 2024. So we're going to start seeing additional distress because anytime you have an interest rate move that big in a business that has fixed incomes, fixed revenues, and so let's just talk a little bit about what that means. When you rent a strip center, a retail strip center, to 3 or 4 tenants, they are signing 10-year leases, and their leases might increase every year, but it's by a couple of percent, and it's a fixed amount that's already determined. So you basically have fixed income coming in from that property. But when your debt goes from 3.5% to 8%, in some cases 3 times what you were paying before in interest, it changes the dynamics of that investment. And you can't raise more income by just taking the rents up when they have those fixed rates. And so it is a big impact to some properties.
Jameson, you made a good point this morning, if you want to just re-go over it, about, if you're going to pay your rent and a car payment.
Yeah, I kind of liken it to if you're as a consumer, let's say you're able to go afford your rent, you're able to afford a car payment, may even have a student loan. In the world where your car payment and the student loan is at 3%, maybe your payments, you're just making it and you're feeling all right. But now those payments go, your car payment goes up by $200, your student loan goes up by $250. Now it just doesn't make sense, and there's a lot of stress there to make those payments. And at some point, that stress breaks. As a wise man once said, every man has their breaking point. So they can hold on as long as they can, but at some point, it's gonna the dam is gonna break. And as a consumer, we understand that because you can kind of get through that a little bit. But if that payment stays high, it kind of becomes the new normal. At some point, you go, this just doesn't make sense. Now, there's been a lot of talk that interest rates would come back down, and that was kind of the hope of a lot of people. But what we're seeing now is interest rates are probably going to stay higher for longer. And so in that scenario, if you're that person and interest rates are going to stay that same amount for a while, you're probably finally going to have your moment. You fall on your sword. You got to sell the car, go talk to the bank. It's the breaking point. And now we're starting to see interest rates that are probably going to stay higher for longer.
And for us, we have the distressed asset fund where we're buying distressed multifamily assets. And that's a question I get from investors every single day is, are these deals actually going to come onto the market? And to answer your question, yes, there is that breaking point. We already are seeing some stress and some deals coming onto the market, but towards the end of this year, we're expecting to see more, and it really gives us an opportunity to go capitalize on these deals at a discount.
And we're a very active buyer of distressed properties, and so we see many every week. We have since we launched the fund a couple of months ago. None of them made enough sense for us to quite move on yet, but many of them were close. But because we expect to see more going forward, we're being a bit patient. We have to be really disciplined in what we want to buy and maintain that discipline through kind of the noise of what we're hearing. But we do expect to acquire some really good assets, 5 to 10 of these assets that are distressed. And not only will they be distressed, meaning we get a good purchase price on them, but they're going to be in good locations. They're going to be in core areas so that when the market does come back, those are going to be the assets that you want to own long term. So that's how we're looking at it. And we expect we're going to see more distress going forward. And just one anecdote, had a few conversations recently with investors who also invested in other funds, and they're starting to get pressure from those funds to do what's called a capital call, where they have to put more money into the project in order for the project to be viable. We're starting to hear more of that happening.
Yeah.
And we're seeing it. We won't mention any names of where that's happening, but it's going to be happening. And those are the projects that will likely go back, have to be sold quickly or go back to the lender. We've already seen several of them, and we've looked at them, didn't quite make sense yet. We're going to be able to acquire some really great assets in this fund. The things that we're seeing right now, including the distress that we're talking about and interest rates being higher for longer, give us a lot of confidence that there's going to be more of these deals coming. So I want to shift now to Arizona. This is where we're based. This is the area that we know very well. And there's two big stories happening in Arizona that we want to touch on. The biggest, of course, is that Arizona is becoming the capital in the United States for chip production. And chip production has historically been in Asia, in Taiwan. We have always had a presence here with Intel. Taiwan Semiconductor, TSMC, started surpassing what Intel was doing and really took a larger part of the market. If you're familiar with NVIDIA, which is a company that's grown super fast, they work with Taiwan Semiconductor for the chips that are needed in their products. So Taiwan Semiconductor is really the leader in the space. And as there continues to be pressure in Taiwan from China, where China is claiming that Taiwan is part of China and that they at some point will take over the country, Taiwan Semiconductor, as a private company, has started to build more and more plants outside of Taiwan, and Arizona is the first onshore plant that they are building, a very large investment. And this is Taiwan Semiconductor working with the U.S. government, getting a lot of public support for this as well. And Arizona is the place that Taiwan Semiconductor decided to come. And so as someone who looks at large trends, you can begin to see what is going to happen over the next 10, 20, 30 years in Arizona as it becomes the chips hub in the U.S. and ultimately in the world as more of this onshoring happens. And this article that we touch on goes to talk about how this whole ecosystem is being built. Not only are we going to have the companies here who are working and producing chips, but Arizona State University, the other universities, are now building programs around teaching students who will then be hired into those plants the proper skills. And this is really a dramatic shift in the workforce that we're going to have here in Arizona. I just want to touch on a couple of things. The U.S. semiconductor industry is projected to face a shortage of 70,000 workers needed for all of this onshoring that's going to be happening for semiconductors. 9,000 of those jobs at least will be in Maricopa County.
Wow.
And in addition to those 9,000, you have all the infrastructure around them, including construction and all the support of creating chips and semiconductors that's going to be happening in Arizona.
If I'm a parent, I'm telling my kids right now, look up the Quick Start program, enroll in it, get on the wait list, because the folks that get jobs at the semiconductor factories are going to make a lot of money someday.
Absolutely. Let the trend be your friend.
Yeah.
If you want to live in Arizona, if you want to stay here, great technical role to go start early in your career, and the sky's sky's the limit with that industry. I mean, you can do really well there. This is not just, labor-intensive jobs. These are highly skilled. They need folks to be on the business side as well as the production side and the construction side. And Arizona is doing it right. They're focusing on building the education pipeline so that TSMC will have the pipeline to fill these jobs as they come out. And the government is very supportive of this plant. Now, the plant itself, there's some controversy around it. We've had some videos talking about the plant that have gone viral, and there's been a lot of negative comments around it, and there's a lot of negative people who comment online anyway. And then there's also positive comments, but fact is that the project is happening. This is good for Arizona. It is progress, and people just have to get used to that. And it's also important to think about why companies end up coming to Arizona. And we have seen many, many announcements of new companies who have looked at different locations as they're expanding and as they're growing, and then they settle on Arizona. And it's pretty incredible to see the growth that is happening here, and that is going to support jobs, that's going to support wage growth. And one of the examples we want to point at is Kohler is building a 216-acre site south of Phoenix, down in Casa Grande. It's about 50 minutes from downtown Phoenix. This process that Kohler went through, they spend a lot of time meeting with government officials. They spend a lot of time meeting with university officials. And it says the Kohler team initiated the search across Arizona, California, New Mexico, Texas, Nevada, and Utah. So they were looking at all these locations. They even looked at Mexico as well. After a few months of searching, they ended up coming down on two cities, Casa Grande and Reno, Nevada, and they ended up moving forward with Casa Grande. All of these things come into play, but one of the important things that they said is that visiting with universities in Arizona, which includes Arizona State, University of Arizona that's in Tucson, Grand Canyon University, that visiting with these universities ultimately sealed the deal for Kohler to move here, to locate here. They're going to be close to both Tucson and Phoenix, and they want to make sure that they have a pipeline of talent to work there. And Arizona is a great place for the talent that they need to support their growth going forward.
Yeah, you have many students, NAU, ASU, U of A, Grand Canyon, that are just feeder programs into these big companies. I know PetSmart is another one that's out here, and they get plenty of their talent from ASU and U of A. I know a lot of law offices will open up strictly in Arizona just because of the talent from Sandra Day O'Connor School of Law and U of A's law school. So companies like Kohler, all bigger companies keep coming to Arizona. It's good for our economy here, and also there's great talent here.
Yeah, and it's really about that ecosystem that they're going to look at. They're going to say, okay, what's the blend of a government that's going to support us?
Yep, exactly.
Good talent, a place that people want to live and relocate. And Arizona hits all of those 3 points. And so companies continue to come here to grow their business and to plant a flag here to be here for a long time.
Do you think Kohler will give us a new bathroom for this?
We use a lot of Kohler in our projects. So yeah, Kohler, hook us up. We're happy you're here, and let's partner.